Hello guys, welcome back to my YouTube channel, PulseTrade TV. So today guys, we are going to have a video reaction on the one of the most popular traders and successful trader on the internet. So if you know him guys, so please subscribe to his YouTube channel, the Rumors. Alright, so we can have lots of ideas and theory on how to gain, how we can apply on our daily trading habit. So without further ado guys, let's start. Okay, before that, I would like to introduce to you guys the trading platform that I am using right now, which is the Bing X. Alright, so I will put the description on the the link on the description guys, sorry. So please review, and if you are a beginner, so this is the best platform that you can use to start on trading journey. So thank you so much guys for watching. So we will be having our reaction video on the Rumors trading strategy. So let's start guys.
Here's the deal. Today I'm going to show you a trading strategy that I would use right now in this market if I wanted to start making $1,000 every single day. Even if I was starting out with zero experience, or I had nothing but frustration to show for my efforts, this right here would be the strategy I would go to right now. Now, for a lot of you, you're probably thinking, man, a strategy like that, with that type of performance, it's got to be complicated. I'm going to have to spend years trying to master this thing. Guess what? You don't have to do any of this, because not only has this strategy helped me become a seven-figure trader, I've had the benefit of teaching this to so many people from around the world. Many people who started with zero experience, many people who had blown through accounts and had nothing but frustration to show for their efforts. I've seen these people flip the script and become successful traders using this strategy. Now, the strategy I want to talk to you guys about today is called the box theory, and I truly believe this is the most simplistic yet effective trading strategy you're ever going to see. In fact, since I started posting on this channel about the box theory over a year and a half ago, it has become one of the most widely viewed trading strategies on the internet. And don't take my word for it, just read the comments. Nothing but simple, stupid, and effective. So today what I want to do is show you everything that I've learned about this box theory over a 2-decade trading career. And I'm going to share with you today many things that I have not shared in the past videos. And as always, towards the end of the video, I'm going to show you a series of live trades using nothing but this box, putting those final pieces of the puzzle together for you. That way, when this video is over, you can honestly look at yourself and say, man, this thing is stupid simple and effective. So let's go ahead and get started today. So here's where we need to start out with the box today. First and foremost, we need to make sure that the box is drawn correctly. Otherwise, all the data, all the analysis that you get is going to be slightly off, and nobody wants to be slightly off. Now, the basic premise that goes behind the box is a very simple one. Where we want to start is by connecting the previous day's high price point with the previous day's low price point. And let me show you a couple of ways to do that. Starting with the most simplistic. Take whatever chart you are trading. So for today's example, I'll be using the stock Apple, AAPL. But I don't care what's up here. It could be anything. But what does matter is take that asset you're trading, move it over to a daily chart. Once you've done that, all you need to do from there is grab yourself some sort of drawing tool, like TradingView has a box tool already. Go to the very highest price point meaning the highest point you can see with your eyes, wick included, and connect that with the lowest price point, just like that. And that creates the essence of your box. Now, once you have done that, you can grab some sort of line or other drawing tool and put a line right in the center of that box. Now, it doesn't have to be perfect. Just, eyeball it, whatever is close, just like that. It doesn't even have to be a clean looking box, just so you get that box drawn. Previous day's high, previous day's low, line in the middle. Now, after this, you can switch to a smaller time frame that you like. So for example, today I'll be using my favorite time frame, which is a 5-minute, but it doesn't matter what you're on. That's the beauty of the box. It'll work on a 1 minute, 5 minute, 1 hour, 30 minutes. It doesn't matter because the analysis is always going to be the same. Now, once this box has been drawn, we can now talk about the relevance and what this box means. And the box has 3 main components to it: the top part, the bottom part, and the center part. And let's go over what each one means, starting with the very top part of this box. The very top part of the box represents the strongest sell side force, hence the reason why the asset had rejected from that price and sold off aggressively. So easy in layman's terms, the largest, strongest, most powerful, well-funded seller is located up here towards the top of the box. The very bottom of the box represents the strongest buy side force or liquidity, right? Hence the reason why the stock bounced from there. So the very top parts of the box represent the strongest seller. The bottom part of the box represents the strongest buyer. And the center of the chart right here represents nothing at all. It's just noise, confusion, and indecision. Okay? That's the essence of the box. So real quickly, at the top of the box, strongest seller. Bottom of the box, strongest buyer. Center of the box, nothing. Okay? Now, with this information, we can move on to how do you actually generate a trade from this. And this is what I love so much about the box. This is what so many other people love about the box, and that's its simplicity. Because there's only 3 basic rules to getting this thing right. And here they are, beginning with rule number 1. If the asset that you are trading is close to, at, or above the top of the box, don't buy it. That's it. Just don't buy it at that moment in time. And the reason for that is what? The top of that box represents the strongest, most well-funded sell side dominance. So ask yourself a very simple question. Why would you want to buy into a known area that the majority of the market can clearly see? A seller that has announced their intentions. Why would you want to walk into the lion's den and go head to head against a known large seller? You're going to get cheesed every time. Rule number 2, if the asset you're trading is close to, at, or below the bottom of the box, don't sell it. Simple, right? Just don't sell it. For the same reasons you wouldn't buy at the top. The known largest collective of buy-side well-funded power is located down there. Again, ask yourself the question, why do you want to go into the lion's den? Why do you want to position yourself to the sell side right next to the largest, most well-funded and transparent buyer? You're going to get cheese down there too. Rule number 3 is the center line. This is what we call do not diddle in the middle. And it's self-explanatory. Just simply don't trade there. Just don't do it. And here's why. Because at the top of this chart, odds are it's going to be sold. There's probably an 80% probability that that strong seller will return. At the bottom of the chart, there's probably an 80% probability that the buyer will in fact return. These are known data points for the market. In the center, you don't have that information. So if you think of it this way, it's possible if done right, you could have a 70 to 80% win rate at the top of the box, a 70 to 80% weight at the bottom of the box, but 50-50 in the middle. You're going to get confusing, whipsawed, poor action, and the risk and reward is not in your favor. Now, I know a lot of you that are watching this that have a tiny bit of trading experience is going, you know what? I've seen some of these stocks just shoot right up through the box. I've seen a bunch of these just go right down and just blow through the box. What do I do then? I've seen these things hang around the middle and just move all over and it just take off up or down. You know what? I've seen a monkey ride a bicycle before. But you know what I haven't seen? I haven't seen a lot of monkeys riding a bicycle. The key to being a successful professional trader is trading probabilities, not perfection. And over the course of time, you've got to go with what is the most likely outcome in every scenario. And if you're always selling with the big seller and always buying with the big buyer and blocking yourself out from the garbage little breadcrumb scalping, you're going to go a long way in this trading business. Nothing will ever be perfect, but you're going to be a winner more than you are a loser. Now, this is all great the way I'm talking it up, but how about we put this theory to the test by showing you some real live trades so you'll learn to trust the power of the box. So let's go back to our Apple chart. You'll see our box is still drawn, and I want to move to the previous day's open right here and focus on the very first candle. I'm going to give you a quiz. This should be a layup for everyone, but tell me, your hands are tied behind your back. You're forced to make a trade. Based off the information you've collected in this video, what would you do here? Buy or sell? Now, hopefully you said sell because the price of Apple is close to the top of that box. Now, you might have been hesitant about saying that because you see this big green candle and it looks like that's going to be a breakout, right? That's the trap. It looks like it's going to be a breakout. What kind of fool would short a bar that looks like that or sell it? Why would you sell something like that? Well, I'll tell you why you would sell something. Because we know the largest, most well-funded, known seller is located there. And what happens? A couple of bars forward and look, smoked. You will get cheesed every time walking into it. And for some of you, you've had this very feeling, and I have too. Now, let me give you quiz number 2 here. Where is it now? You see it here? Is it closer to the bottom of the box or the top of the box? The bottom. So what should you be thinking? Again, hands tied behind your back, forced to make a trade. What button do you hit? Buy button, sell button. It's the buy button. And just like the previous candle, I know that didn't look like a sell, but it was. And I know this doesn't look like a buy, but I bet that it is. Why? Because you're now bordering the strongest, most well-funded and known transparent buyer. So if I just kind of fast forward this a little bit right here, you're going to see that's exactly what happens. It tags the very bottom of that box and finds a way to move back up into the center of that range. So again, just look at it. You traded from the very top part of the box. The known seller came back into the market. You tested the bottom of the box and it came right back into the known buyer and then bounces back up. The key to learning this and starting with the very best and most powerful part of the box is it's also a way to keep you out of trouble, to keep you from walking into the market's traps. Now, a lot of you might say, well, look, you're cherry picking some charts. This doesn't work all the time, or it only works in a certain market. But let me go ahead and show you what the next day's action looks like. So I went ahead and jumped forward to save time into the next day's action. And what we're going to do is just scoot our box over here. Right? And for that day, we had just a little bit lower price print right there. So that is our new drawn box. So again, I want to go back and I want to just cover the basics. Remember, keep it simple. So here it is. Apple is opening up. You tell me where it is. Is it at the top or is it the bottom? It's at the bottom. Again, I know this looks bearish. It looks like a sell. It looks like it's going to collapse. But by now, you should know the rules. You tell me, again, hands behind your back, you got to make a trade right now. Buy button, sell button. Which is it? Hopefully by now, you said buy. If you didn't, you're going to have to rewind the video. What do you think happens here? Right? Goes right back up through the top of the box. Now notice though, when you get through the top of the box, even though you extended slightly, what happened? It was never able to hold that momentum over top of the box. So again, you can see span through several days of activity. It's always managed to test the very top of the box and the bottom of the box. So quickly, as prices get towards the top of the box, we are sell side focused. Bottom of the box, we are buy side focused. In the middle, we should do our best to stay out of that because our accuracy isn't going to be as good. So now we're going to move on to the next part of drawing boxes, which is alternative boxes. You're going to need to know this because I'm sure some of you have this question right now. What do you do in those cases when price breaks the box? When you wake up and the price is way, way above the previous day's high or way below the previous day's low. So I'm going to show you a couple of ways to draw some alternative boxes. That way you can still continue to use the box theory. Starting with gap up and gap downs and how we draw these alternative boxes. Now to save time, I went ahead and drew the box from the previous day, connecting the previous day's high with the previous day's low. I moved that box into the regular session, and as you can see now, the ES is trading far above the previous day's high. In this case, we need to create new levels and new boxes, and here's how you do that. When in doubt, the cheat code for the box is at any given time, you can always connect the very highest price point you see with the lowest price point you see, that would be right here, with the lowest price point you see, and that creates your alternative box. So whether it's at the beginning of the day, the middle of the day, the end of the day, you can always create, let's call it a cheater box, and use those levels. And here's why this is so beautiful, continuing to hammer home the power of the box theory. Because regardless of where that box has been drawn, the three rules still remain. You are a seller at the top, a buyer at the bottom, and you're not trading in the middle. So having known this information, going as far as we have with this video, while this has gapped up and it looks stupid strong, what do you think is the odds play here? You got to push a button. Is it a buy button? Is it a sell button? You tell me. I hope you said sell, because what happens is down it goes, right? And there it is, right? Moves down towards the very base of that box. So here's what I want to show you, though, that you probably don't see too many times on YouTube videos, but this is very, very important. This goes in tandem with understanding and believing your technical analysis and understanding the strategy. First and foremost, just like the rest of them, it didn't look like a sell when it was supposed to be a sell. It doesn't look like a buy when it's supposed to be a buy. But notice on this one, it tapped the box, and this sneaky little thing tried to come back up there. Just try to throw that last little shade of doubt into the trader's head. Then it eventually cracks. It eventually cracks and rolls over because the largest seller was always there, and that largest seller would always win out, as the buyer would always win out. Now what we're going to do at this point is I'm going to show you a couple of live trades using nothing but this box theory in its simplistic form, which is selling at the top of the box, buying at the bottom of the box, and staying out of the middle. These are recent trades we took in our live community that we're running every day. And as I said, 26 years into this game, I'm still using the box theory every day. So let's take a look at a couple of those trades. Now, as we go through these live trades that we made in the community, I'm going to pick these things apart, but I just want you to simplify your focus and think about those three rules. We are sellers at the top of the box, we are buyers at the bottom of the box, and we're just not going to diddle in the middle, right? Let's just keep it simple. No indicators, no fancy candlesticks, no jargon. Let's just keep it stupid simple. So let's go through this YM trade, first and foremost, drawing the box. So what we do is we connect the previous day's high with the previous day's low, and we extend that out right towards the market open, right? Very simple. Now, knowing what you know up to this point in this video, it should be a slam dunk, easy peasy answer. What do you do here? What do you do here? I mean, look where it's at. It's at the bottom of the box. So while it may look like a market crash, a super dump, this is a buy. It's a buy because you are against a known buyer. And let me show you what I mean by known. If we go back and we take a look at this chart, this buyer was tested once, twice, 3 times, 4 times, and now a 5th time. So are you going to tell me that on the 5th time, the buyer's just not going to show back up? They've been tested. They've been proven. You're at the bottom of the box. So let's go ahead and open this up, and let's see what happens. Now, as I play this forward, I'm just going to go one more bar forward, and you'll see we start out with this very, very nice screen. Now, this is not an entry class or every little minute detail, but in this case, all I look for is just one little line of support, and that's enough to go in. Because as I said in so many of my other videos, especially like the Unsharp The earlier you can get in with the signal, the less your risk is. So the beautiful thing about the box is the stop loss goes right underneath of the low. So the ones that you do lose on, the 15, the 20% that you lose on, the losses are going to be so much smaller. But here's the beauty. The risk versus reward is nuts because the target price is either the center or the middle of the box. So everything that you are trading has maximum range. So if we kind of move this forward, you'll see what happens is it shoots right up into that level, right? And gets rejected. Now, take a look at the rejection. Where did it come from? It came towards the top of the box. Now, this one was a little shy of the top, but as you get towards the top of the box, the philosophy here is you can't start buying on this candle. You have to buy on this candle. Bare minimum, that one at the latest. You cannot start chasing into those momentums like most strategies do. Now that we have gone lower, what is most likely going to happen? Now I'm going to go ahead and hit the sell button because that's what you should be doing here. You should be looking to sell a position like that off of the top. Now in this case, the fill on this platform is going to be way later. It should have been right there at the break of that candle. Stop loss should be over top of the high of that candle. Target price is moving back towards the bottom of the box, okay? Now this is a little bit late of a fill, so it won't be 100% accurate, but you'll get the message because what happens is you come back down towards the bottom of the box, right? Now if we stop right here where we are, and I just continue to move this box out, where are we? We're now slightly below. Now, one thing to understand about the tops and the bottoms is we're just talking about zones. As we get close to, our mind should shift to selling. As we get close to, our mind should shift to buying. So what we're looking for in this case is a buy because we are underneath the box. Now, we do need the candle signal just to take out the top. So let's go move it forward and see what happens. And you kind of move up right there is good enough. We're going to go ahead and hit the buy button again. It's almost the same trade as it was before, targeting back towards the middle of the range or even higher, right? And you'll see what happens is it comes back up again, right? But notice the pattern over and over again. Testing the biggest seller, testing the biggest buyer, returning to the center of the charts. It constantly has this momentum over and over and over again. And you can see using no other candlesticks, no other theories, no things that take you 19 million hours to figure it out. You can actually put some pretty damn good trades together. You will be pretty consistent by using this type of a formula and just those 3 rules. So guys, I'm going to end the video there. It's been my pleasure to talk about my favorite trading strategy, which is the box theory. I hope you can agree with so many others that this is the stupid, simple strategy of a lifetime. And if you just follow those 3 basic principles of being a seller towards the top, a buyer towards the bottom, and staying out of the middle, you should be able to put together some very nice quality trades. Now, one last thing I want to remind you of before I sign off is if you want to see these types of trades in real time, every day we trade live in our new squad trading room. My wife and I just put this thing together. We've had a great time trading live. We're going to continue to do this in front of everybody. So if you're looking for a more tailored experience where you get exactly what you see on the screen, live navigation, live trading, on screen with narration every day, no Discord hindsight stuff, just real live, real world stuff. Click the link below or follow the link below in the description box. That'll take you to our squad. So on that note, guys, it's been my...
Alright, so that's it, guys. So as you can see, guys, this strategy, the box theory is really some kind of very simple and technical strategy on trading. So we can adapt this, guys, and apply this in our everyday trading. Alright, so as you can see, very simple explanation, and wow, this is my first time seeing this kind of strategy, the box theory. So I have many things to learn from this guy. Very popular and very influential trader and on the internet. So please subscribe his YouTube channel, guys. the Rumers, and I will put the his link on the description, guys, so you can subscribe his YouTube channel. And of course, please do also subscribe on my YouTube channel, PulseTrade TV, and we can have more video reactions about trading strategy on internet. So thank you so much, guys, for watching, and I hope you enjoy our live streaming today. So that's it. Peace, yo. Good luck to your trading.